Picture this. In the span of a single night, investors across every continent began selling off American assets as if they'd suddenly become radioactive. Equities, government bonds, even U.S. Treasury securities, traditionally considered the safest investment on Earth, all abandoned in what would become one of the most dramatic confidence crises in contemporary financial history. The trigger? America's own government grinding to a halt, leaving Wall Street operating in the dark while global markets descended into chaos. Treasury Secretary Scott Bessent issued a stark warning. U.S. economic growth faces serious headwinds. The culprit? The government shutdown itself. But this isn't just another partisan squabble in Washington. This is the moment when the world began questioning whether the American financial system, the bedrock of global commerce for 8 decades, could still be trusted. When the data vanished, inflation metrics, employment figures, consumer spending reports, traders lost their navigation tools. And in that information vacuum, panic flourished. Capital rushed toward gold, cryptocurrency, and Asian financial centers. The dollar, historically the planet's ultimate safe haven, abruptly transformed into a symbol of instability. Treasury Secretary Scott Bessent failed to read the warning signals correctly. Policy intentions became murky as concerns over America's debt and deficits intensified. Foreign governments holding U.S. Treasury securities began reconsidering their exposure. China's consistent gold purchases and bilateral trade agreements denominated in Yuan suddenly offered international players an alternative to a fragile dollar-dominated system. The fundamental question emerged: is America still the stable center of global finance? Warnings have already surfaced that this shutdown will amplify uncertainty and erode confidence in the U.S. economy as critical data becomes increasingly unavailable to market participants. The consequences arrived immediately. Gold prices spiked sharply. Bitcoin surged to unprecedented levels. Capital flooded into Singapore, Seoul, and other Asian financial hubs. The dollar's status as the world's reserve currency now faces genuine contestation. Balance sheets across the globe are being restructured in real time. Wall Street's established institutions suddenly look exposed and vulnerable. So who profits when confidence evaporates? We're going to trace the complete chain of events: how Trump-era tariffs, fiscal mismanagement, and a paralyzed government transformed confidence into capital flight. I'll demonstrate exactly where money is flowing right now. If you have savings or investments of any kind, this directly affects you. Before we dive into the comprehensive analysis, make sure you're subscribed, and let's start the discussion in the comments section. Now let's examine how America's credibility vanished in a matter of hours. Act 1. The Information Blackout. Early in October 2025, the United States government closed critical federal agencies and halted the publication of essential economic data. Inflation indicators, jobless claims, retail consumption statistics, all simply disappeared from public view. Wall Street, suddenly stripped of the information it depends on to function, was thrust into profound uncertainty. Those whose livelihoods depend on analyzing numbers discovered that the numbers themselves had ceased to exist. "It's completely ambiguous," one analyst explained. "It's difficult to determine what's actually happening because this isn't a conventional downturn, where everything's collapsing visibly. This is an uncertainty freeze. Market participants don't know how to react. They're struggling to make investment choices. They can't make informed employment decisions. Which means every single piece of new information becomes absolutely critical." Major institutional funds reacted almost instantaneously. They began liquidating U.S. equity positions, offloading Treasury securities, and converting dollar holdings into assets located far from Washington's political turbulence. This wasn't a measured, gradual withdrawal. It became a stampede. Within mere hours, the dollar, long regarded as the foundation of global financial security, began weakening. By October 1st, 2025, the U.S. dollar index had fallen to 97.7, representing approximately a 9% decline since January. Investors watched as a symbol of reliability transformed into a source of risk. Simultaneously, gold climbed toward historic peaks, and Bitcoin experienced dramatic gains as capital sought assets more resistant to political manipulation. Let's be direct about what's unfolding. What's happening to the US dollar right now is genuinely alarming. In just the first 6 months of 2025, the dollar experienced its steepest decline in over half a century. From January through June, it dropped more than 10%. A collapse of this magnitude hasn't occurred since the 1970s. This isn't merely an abstract statistic. It means your savings accounts, your investment portfolios, your retirement funds, anything denominated in dollars, are hemorrhaging real purchasing power. And the situation is deteriorating. Experts at Morgan Stanley are projecting the dollar could depreciate an additional 9% by next year unless dramatic corrective measures are implemented. Consider the implications. 1/10 of your dollar's value simply erased. This is no longer a gradual erosion. It's a deluge. Meanwhile, the rest of the world is quietly adapting. According to International Monetary Fund data, countries are systematically reducing their dollar reserves. The Chinese yuan and even the Australian dollar are capturing larger shares of global reserves. Why? Because the US dollar no longer represents safety. Nations don't hold dollars out of affection for America. They maintain dollar reserves because they trust the currency's stability. But that trust is evaporating. Markets despise uncertainty. And the Trump administration has essentially made uncertainty its governing philosophy. Every week delivers another unpredictable announcement: tariff ultimatums, fiscal incoherence, public attacks on Federal Reserve independence. America's credibility, historically its most powerful asset, is being systematically dismantled in real time. Investors recognize it, central banks acknowledge it, and they're quietly repositioning accordingly. China's yuan has emerged as the primary beneficiary of this chaos. Beijing has been, strategically preparing for this moment for years, signing energy and commodity agreements that permit yuan-denominated payments, constructing its own cross-border payment infrastructure, and expanding influence through the Belt and Road Initiative. Now, when traders and governments seek stability, they're increasingly turning to the nation that continues delivering consistent trade growth and data transparency, not the one closing its agencies and, silencing its economic statisticians. Concurrently, the Australian dollar has surfaced as an unexpected sanctuary. Australia's robust resource exports, gold, iron ore, liquefied natural gas, provide its currency with tangible backing, something the US dollar increasingly lacks as American debt spirals upward. The country's stable political environment and strong economic integration with Asian markets make it a logical destination for investors seeking Western-style stability without American dysfunction. In 2025, Australia resembles what America used to represent: predictable, fiscally responsible, and globally respected. This shift should genuinely alarm Washington. When countries lose faith in the dollar, they stop financing America's enormous national debt. That translates to higher borrowing costs, diminished purchasing power, and accelerating inflation for American citizens. It signifies the end of America's exorbitant privilege, the ability to print currency that the world automatically accepts. Trump pledged to restore American greatness. Instead, his chaotic governance has triggered investor flight, weakened the currency, and handed China an opportunity it has sought for decades. The tragedy extends beyond finance. This is the narrative of a superpower forfeiting the world's confidence. And once that confidence vanishes, historical precedent demonstrates it rarely returns. The government shutdown intensified everything. Critical data, from inflation to retail sales, went completely dark. Markets lost all directional guidance. The U.S. Treasury Department couldn't provide basic updates. Investors and foreign governments were left speculating blindly. Imagine piloting an aircraft with zero instrumentation. That's the current condition of global financial markets. Markets don't collapse solely because of negative news. They collapse because of uncertainty. When information signals disappear, fear fills the vacuum, and when fear takes control, capital doesn't retreat gradually. It flees in panic. And while Washington remains frozen in silence, Beijing advances with calculated precision. Act 2. China's strategic advance. Let's confront reality. America is surrendering control over the global economic system. And honestly, the evidence is irrefutable. The Chinese yuan's proportion of worldwide foreign exchange transactions has jumped to 8.5%, up from 7% in 2022, according to the Bank of Finland's Institute for Economies in Transition. Now, this might appear incremental, but in global finance, it represents a seismic shift. The yuan is now the fifth most actively traded currency globally, trailing only the dollar, euro, yen, and British pound. A remarkable ascent for a currency that was heavily restricted just a few years ago. For decades, the international monetary system centered around four established currencies: the US dollar, euro, Japanese yen, and British pound. The yuan was effectively excluded due to capital controls and Western skepticism. But in 2025, that barrier finally fractured. Its progression toward fourth position marks the first instance of a developing economy challenging the Western monetary bloc at this magnitude. While Washington engages in shutdowns and partisan gridlock, Beijing is methodically constructing a financial architecture that no longer requires American participation. Throughout Asia, Africa, and Latin America, nations are now conducting trade settlements in yuan instead of dollars. Russia, Saudi Arabia, Indonesia, Brazil, even France and India are either using or experimenting with yuan-denominated energy and commercial agreements. They're not requesting permission. They're building a system where the dollar no longer serves as the gateway to international commerce. China's digital yuan accelerates this transformation. It enables trading partners to transact directly through encrypted digital channels. No SWIFT network, no American banking intermediaries, no dollar conversions required. Even under U.S. sanctions, this network sustains trade flows. It's not merely sophisticated economic policy. It's a geopolitical instrument developed while Washington distracted itself with slogans and political theater. And the outcomes speak conclusively. During the first 8 months of 2025, China's foreign trade expanded 3.5% year-over-year to 29.5 trillion yuan, with exports climbing 6.9%. In May 2025 alone, it registered a $56.5 billion trade surplus. Between January and July, it imported $1.45 trillion worth of goods. Even facing tariffs and a sluggish global economy, China's economic engine continues expanding, consolidating its dominance over supply chains and demonstrating that resilience trumps rhetoric. Meanwhile, Beijing is systematically reducing its U.S. Treasury holdings, the same securities that once anchored America's financial stability. China's Treasury positions have reached multi-year lows, and it's not isolated in this strategy. Japan, Saudi Arabia, Taiwan, and the United Arab Emirates are also decreasing exposure. This global movement toward de-dollarization represents a preemptive defensive measure to escape a financial system drowning in American debt obligations. Where is this capital being redirected? Into physical gold reserves, energy assets, and infrastructure developments throughout the developing world. Beijing has been accumulating tangible gold, real physical wealth, while Washington continues printing currency and raising the debt ceiling. When confidence in fiat currency deteriorates, gold reclaims supremacy. And China grasps this principle better than anyone. Each gold bar, every yuan-based trade agreement, every digital payment corridor represents another component in a new financial order, one that no longer orbits around America. So when the US government shutdown sent Wall Street into disarray, China remained unshaken. Its revenue streams were diversified, its currency internationalized, its defensive positions established. And as Beijing offers something the West no longer provides, stability, structure, and predictability, the world is beginning to pay attention. But while China constructs new foundations, global investors are already pursuing safety through other means. Act 3. The Flight to Tangible Assets. Gold and Bitcoin have experienced dramatic surges recently. And honestly, the timing is far from coincidental. As America descends further into political dysfunction and economic mismanagement, investors worldwide are transferring their confidence to assets that cannot be printed on demand or politically manipulated. Gold has climbed near $3,960 per troy ounce, the highest valuation in recorded history. Analysts at Goldman Sachs now project approximately $4,900 by the conclusion of 2026, while HSBC anticipates it will breach $4,000 within weeks. The signal is unmistakable. Confidence in paper currency, particularly the US dollar, is rapidly evaporating. Driving this rush is one overwhelming factor: uncertainty. As Washington stagnates and debt anxieties intensify, declining interest rate expectations provide additional momentum for gold. Because, let's be honest, holding cash now means watching purchasing power systematically vanish. Central banks spanning from Asia to the Middle East are stockpiling physical bullion to insulate themselves from dollar volatility. Each crisis emanating from Washington strengthens gold's attractiveness, transforming it from a traditional safe haven into a statement of independence from America's financial disorder. Bitcoin is amplifying that shift, only more dramatically. Within days, it shattered the $125,000 barrier, establishing fresh all-time records. What once appeared to be speculative gambling has evolved into a protest against the system itself. Even major financial institutions that previously dismissed cryptocurrency are quietly accumulating positions, not because they've suddenly embraced its long-term potential, but because they no longer trust the dollar. If current momentum persists, both gold and Bitcoin could climb substantially higher before year-end, representing a global vote of no confidence in America's paper promises. Act 4. Tariff Chaos and the Deepening Crisis. Unfortunately, there appears to be no resolution in sight for America's economic predicament. Despite months of grand promises and loud proclamations from Washington, America's economy continues struggling under the burden of Trump's reckless policy decisions. The tariff offensive that was supposedly going to restore manufacturing jobs and economic sovereignty has instead drained investor confidence and elevated prices for ordinary American consumers. The once mighty dollar, which represented global stability for generations, is now experiencing one of its most precarious moments in decades. The so-called new tariff agreements are riddled with ambiguity and political manipulation. Even Trump's purported deal with China, which he characterizes as a triumph, remains incomplete and vague. Beijing hasn't confirmed the terms, and major American corporations continue reporting delayed shipments and unpredictable pricing structures. Even the rare earth minerals agreement with China remains unresolved. And without that component, there cannot be a finalized comprehensive trade deal. In reality, there exists no stable framework, only ambiguous commitments and media photo opportunities. As long as these economic confrontations remain unresolved, markets will continue experiencing volatility. Investors are hedging through gold, the yuan, and even the Australian dollar, preparing for what comes next. America's fiscal credibility is deteriorating, and every new policy announcement deepens the fractures. If clarity doesn't materialize soon, the dollar's decline won't merely continue. It could accelerate into a complete collapse of confidence. The storm, it appears, has only just commenced. Closing. The question of belief. The question now isn't whether Trump can repair the damage. It's whether anyone still believes America is capable of restoring order. What we're witnessing isn't just a currency fluctuation or a temporary market correction. It's a fundamental restructuring of global financial architecture, a transition that historians may someday identify as the moment American economic hegemony began its irreversible decline. For 8 decades, the dollar's dominance wasn't maintained through military might alone, but through something more powerful: trust. Trust that America would honor its obligations. Trust that its institutions were stable. Trust that its word carried weight. That trust is now in free fall. Every day the government remains paralyzed. Every piece of missing economic data, every contradictory tariff announcement accelerates the exodus. Investors aren't abandoning America because they want to. They're leaving because they feel they must. China didn't create this crisis. Trump's chaos did. Beijing simply recognized the opportunity and moved with discipline while Washington descended into dysfunction. The tragedy isn't just economic, it's historical. Superpowers don't typically fall through dramatic military defeats. They decline through accumulated bad decisions, eroded credibility, and the slow realization by the rest of the world that better alternatives exist. And right now, the world is discovering those alternatives. Gold vaults in Singapore, digital Yuan networks spanning 3 continents, Australian bonds offering stability without American volatility. These aren't just investments, they're statements of lost faith. The American century may not have ended with this shutdown, but future historians might well identify this moment as when the ending became inevitable. Because once the world stops believing in your promises, no amount of military power or political rhetoric can restore what's been lost. Trust, unlike currency, cannot simply be printed into existence. The question facing every American, whether you hold stocks, bonds, savings, or simply earn a paycheck, is simple. What happens when the world no longer needs your dollar? We may be about to find out. If you want to continue receiving analysis like this, ensure you're subscribed with notifications enabled. See you in the next one.